Ginkgo Bioworks is rocketing higher in reaction to an AI partnership with Google Cloud. The stock is up over 20% in reaction to this news. The deal is focused on cloud and AI technology. It will help companies build large language models running on Google Cloud's Vertex AI platform in genomics, protein functioning, and synthetic biology. Per the terms, Ginkgo will pick Google Cloud as its primary cloud service provider, and Google Cloud will fund the company's efforts to reach certain milestones over the next 3 years. Ginkgo said that following the partnership, its customers will be able to accelerate innovation and discovery in multiple fields across drug discovery, agriculture, industrial manufacturing, and biosecurity. So in this video, what I'm going to do is I'm going to go through the financials of this company. I'll go through analyst ratings, and at the end of the video, I will give a price prediction based on technical analysis. So with that being said, let's dive right in. So if you don't know anything about the company, I will tell you briefly what this company does. This company develops platform for cell programming. Its platform is used to program cells to enable biological production of products such as novel therapeutics, food ingredients, and chemicals derived from petroleum. The company various end markets, the company serves various end markets, including specialty chemicals, agriculture, food, consumer products, and pharmaceuticals, amongst some others. So this is a company that's been around for a bit. It's been around since 2008. So with that being said, let's dive right into the financials. So we can see here that their valuation, unfortunately, the company doesn't make any money, but we are at a 2.4 times price to book ratio. For those that don't know, that basically means that the market cap is 2.4 times the book value of this company, and book value is simply just kind of the assets on the company's balance sheet. And then in terms of growth, the company has minus 39% growth over the past 12 months, which is obviously not good. You don't want to see growth declining in a company that isn't making money. And then the company has growth, though, over the next 12 months of 5%, which is actually above the sector median and definitely a pretty good number. So with that being said, growth looks poor for the past 12 months, but it's great to see that this growth number is turning around. And then let's look at the profitability metrics for the company. So we can see here that their gross profit margin is 70%. This is revenue minus cost of goods sold. This is simply what a company makes for what it sells. So this 70% number is pretty good. It's actually well above the sector median at 28%. So that is a good sign for the company. And then we can see cash per share is at about 53 cents per share, like I had said. So that's roughly a fourth of the market cap in cash, which definitely gives the company a solid foundation and the ability to obviously fund its future operations, given the company isn't profitable. But with that being said, let's take a deeper look at this balance sheet. So the company has $1.1 billion in cash and $400 million in debt, meaning that the company has about $700 million more cash than debt. And when you kind of compare this to the peers, it shows that the peers actually have way worse off balance sheets. So the best balance sheets, when you compare DNA to peers, is DNA, which is great to kind of see here, right? And then let's take a look at the analyst ratings for this company. So we can see here that this company has a buy rating from 6 different analysts, and the company also has a sell rating from 2 separate analysts. So there are kind of 6 to 2 when you look at bulls to bears here for this company. So that's very interesting there. Definitely shows that the company has a kind of wide variance of opinion on the market. So we can see that the recent moves have been by Goldman Sachs. So Goldman actually downgraded the stock to a sell with a $1.25 price target back in June on the 5th. So obviously, no one likes to see a stock get lowered to a sell, but that's really the most recent coverage we have for this stock. And we can see, obviously 6 to 2 definitely signifies that the stock is somewhat of a battleground stock, meaning that there is a wide range of opinions throughout Wall Street for the stock. And then we can see that DNA is coming up to test a major resistance level at $2.23. So I'll give my price prediction here. Obviously not financial advice, do your own research. But we're coming up to test a major resistance level. I call this a major resistance level as this is where shares had topped out on the 2nd of February. It's also where shares had consistently bottomed in the summer of 2022, especially in June and in September. So this has been a significant level of consolidation for the stock. We've seen some selling pressure around this level, which does imply that this level is a very significant one for the stock. So there's really two ways I see this playing out for DNA. The first is that we move through this resistance level and we see a larger move higher. How high? Well, really depends on past levels of support and resistance. You can see really the next major level of resistance is at about $3.40. So that's where you could see shares kind of topping out. So in conclusion, I do think we could see a sustained move higher up to about $3.50 roughly. Like I said, though, there's multiple ways this could go. So if we reject this level, I could see us coming back down to test the 50 DMA at about $2. So that's kind of the two scenarios I see for this stock. Like I said, I think this breakout is really the more likely move, and a lot of that is based on this massive jump in volume we got here. So we can see here that volumes had really hit their all-time, actually not all-time highs since 2022 in August. So we're at a definitely elevated volumes for this stock. So that's something to keep in mind. I do think we likely break this resistance level on the backs of elevated volumes. I think that is very likely for the stock. And then so that is kind of my price prediction for shares, is that we overtake this resistance level and we move higher up to about $3.50. Obviously, though, this is kind of invalid until we break this resistance level at $2.20. So that's kind of what I'm seeing for the stock. It's a nice move from $2 up to about $3.50. So that is my price prediction on shares. Quickly, though, I wanted to give you an update on short interest. So 16% of the float is sold short, which is definitely a good chunk of the float. And we have 8.5 days to cover, which for those that don't know, that basically means that it takes 8.5 days of average volume to cover the existing shares sold short. Typically, when we're looking for a stock to signal a short squeeze, when we're looking at that short data, especially days to cover, we look for a days to cover of over 10 to signify a high likelihood of a short squeeze. So 8.5 when you add it up with the 16% short float. I would say this company definitely does have a strong likelihood for a short squeeze. So with all that being said, I hope you enjoyed the video. Please leave a like and subscribe, and let me know if you have any stocks you are interested in. Let me know in the comments and I can cover them as well. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.